Leverage in trading. Strategies to maximize returns. Leverage is one of the most powerful tools available to traders, but also one of the riskiest if not used wisely. In simple terms, leverage allows you to control a large trade position with a relatively small amount of capital. For example, with 1-to-100 leverage, you can control a $10,000 trade using just $100. While this sounds exciting, it's important to use leverage strategically to maximize your returns without blowing up your account. 1. Understand the power and risk. Leverage amplifies both gains and losses. A small price move can lead to a significant profit or loss. That's why professional traders first focus on risk management before applying leverage. Never risk more than a small percentage of your trading capital on a single trade, even when using high leverage. 2. Use leverage based on volatility. The more volatile a market is, the less leverage you should use. For example, when trading forex majors like Euro to USD, some traders may use higher leverage due to their relatively stable behavior. But with more volatile pairs like GBP/JPY, reducing leverage helps cushion the impact of sudden spikes. 3. Set smart. Stop losses. With leverage, setting stop-loss orders is critical. You must define your risk per trade and stick to it. Using ATR, average true range, or support resistance zones can help place logical stops and protect your account from sharp market moves. 4. Scale in and out of positions. Instead of entering a full position all at once with high leverage, consider scaling in, entering in parts as the market confirms your direction. This reduces your risk while still allowing you to benefit from the leverage when the market moves in your favor. Leverage, when used correctly, can dramatically increase your returns in trading, but it must be paired with strong discipline, risk management, and a clear strategy. FXCM provides flexible leverage options, but remember, it's not about trading big, it's about trading smart.